Welcome to Daily Crypto, episode 49. The crypto world, as we all know, is just incredibly fast-paced, dynamic, often pretty surprising. Today, we're taking a deep dive into the latest events, the trends that are really shaping this space. We're going to unpack, well, everything from these huge investor moves to what's happening with smart contracts, and crucially, what it all means for you navigating this market.
That's exactly right. The speed of evolution, it's really something else in crypto. Big shifts can happen in minutes, not days or weeks. So our goal today is really to help you cut through that noise, to understand not just the headlines, but the why behind them. Because honestly, that's where the real insights are, the actionable stuff for anyone watching this market.
Okay, let's jump straight into some news that, well, definitely sent some shockwaves. We've seen this really astonishing transaction. A Satoshi-era Bitcoin investor.
Right, someone from the very early days.
Exactly, maybe holding since before 2010, maybe even untracked coins. They just cashed out 80,000 Bitcoin.
80,000.
For $9 billion. Through Galaxy Digital. I mean, this wasn't just a large trade. It's genuinely one of the largest single crypto transactions ever recorded.
Yeah.
The scale.
Yeah.
It's almost hard to wrap your head around.
Absolutely. And the key takeaway here is the immediate impact, right? A sale that huge, it directly contributed to a big spike in volatility. We saw the Bitcoin Strength Index, that analytic that gauges BTC against other assets and its own history.
Yeah, I saw that.
It crashed,
Right.
which indicates a pretty significant loss of short-term momentum. And on top of that, Galaxy Digital, they saw something like $500 million in their own assets or maybe client positions liquidated.
Wow.
Directly because of the market reaction to this huge sale. It just shows how one whale can still really move the whole ocean, especially when that kind of early liquidity hits the market.
That immediate volatility is clear, but, for a market that prides itself on decentralization, isn't there sort of a contradiction when one entity can have such a massive impact?
Yeah.
Does it make crypto just inherently less stable than traditional markets? Or is this just like growing pains?
That's a really excellent question. And it gets to the heart of how the market structure is still evolving. The ideal is decentralization, sure, but in the real world, capital accumulates, especially with those early investors. So you inevitably get these points of concentrated influence.
Right.
So this event, it really highlights that despite the decentralization narrative, these big whale movements can still dictate short-term feeling, sentiment, and liquidity.
So the takeaway for listeners is?
It's that even with the decentralization promise, you still need to watch the chain. Look for these large early era movements because they can trigger pretty significant ripple effects. A bit like traditional market shocks, actually.
Okay, so given that huge event, what's it telling us about the broader market sentiment right now?
Yeah.
We're seeing Bitcoin derivatives data. It seems to be really questioning the strength of that $115,000 support level for BTC.
It does feel a bit like everyone's holding their breath. Definitely. Bitcoin traders are turning cautious. You can see it as BTC just kind of hovers near that critical support. But what's interesting, at least for now, is that outright panic. It seems largely absent in the derivatives markets.
Okay.
But yeah, we absolutely have to acknowledge the warning signs. Bitcoin is at significant risk of losing that $115,000 support.
And if that happens?
Well, then it raises the very real chance that this altcoin season we've seen starting up, it could just end abruptly. It's not just a technical number, It's psychological for a lot of traders.
But hang on, if we're really at risk of losing $115 and the alt season could end, doesn't absence of panic just sound like, I don't know, a temporary calm before a potential storm?
Yeah.
What's actually holding back widespread panic then?
That's a great point, yeah. The absence of panic suggests caution is high, but we're not seeing widespread forced selling, no capitulation yet.
Right.
Could be down to more resilient long-term holders, maybe, or perhaps just this belief that any dip will get bought up, a deeper underlying confidence than the short-term derivatives suggest.
Interesting.
What we often see is this sort of multi-layered reaction, quick caution in derivatives, but maybe a slower, more considered response from spot markets and the long-term folks. It's about telling the difference between tactical positioning and fundamental belief.
Right. Okay. Now let's shift our gaze to another major player. Because here's where things get really interesting with Ether's renewed strength. While Bitcoin's been choppy, ETH bulls seem to be seriously targeting $9,000.
Yeah.
And it looks like there's some pretty strong factors lining up. Tight supply, rising demand, bullish technicals. It's quite a different picture.
It really is. And it's not just, retail hype driving this. We're seeing significant institutional moves backing Ether. big signals from traditional finance.
Like what?
Well, for instance, Bitmine, that's an institutional crypto fund, they just snapped up over $2 billion in ETH in just 16 days.
$2 billion. Wow.
Yeah, looks like part of a sort of treasury arms race
Yes.
among the big players. And then there's Ether Machine, another institutional vehicle, tacked into demand with a massive $1.5 billion ETH vehicle, specifically for accredited investors.
So serious money coming in.
Definitely. And then you have the Genius Act that proposed federal framework for DeFi and tokenized securities. That's also bringing renewed institutional interest, particularly to Ether and Ethereum-based yield opportunities. It's pretty remarkable that even with Bitcoin and other alts selling off, ETH's price still seems on track for $4K. Shows some real resilience.
That institutional appetite is definitely a powerful narrative for ETH. But let's pivot to XRP. That's had its own drama recently.
Oh, yeah.
We saw that XRP dump where Ripple's co-founder got some heat for moving $175 million in XRP right near its recent highs. That's a lot of money.
Yeah.
And it definitely made people question insider influence.
It absolutely did. And the price it dropped a sharp 19% right after. That's a big correction. But interestingly, some analysts are actually calling it a healthy correction, like it was needed.
Healthy? How so?
Well, the analysis suggests XRP's bull run might have topped out around $3.65 anyway. And this drop was largely driven by whales selling, yes, but also compounded by just wider market liquidations hitting the altcoin space.
Ah.
So while it looked dramatic and definitely sparked talk about transparency from a pure market mechanics view, it might have just been a necessary reset, flushing out some leverage.
Okay, that makes sense. Now, beyond the big guys like Ether and XRP, we're seeing other alts making moves too. Let's briefly touch on Solana. We heard about Firedancer speeding things up,
Right.
but maybe not reaching full potential right away.
Mm-mm.
And then there was that fun news about Pokemon coming to Solana.
Yeah, Firedancer is that new validator client from Jump Crypto, highly anticipated. It's designed to seriously boost Solana's speed and resilience. It's a big deal for scalability and network diversity, offering an alternative to the current software.
But it won't be full speed immediately.
Probably not absolute peak performance right out of the gate, no. It's more like a journey as the network optimizes and more validators switch over, a phased thing.
Gotcha.
And the Pokemon news, it just highlights the diverse and sometimes surprising ways crypto is growing. Mainstream adoption, linking Web3 with huge entertainment names.
Wild stuff.
Yeah.
Okay, moving from market dynamics to the broader ecosystem. Let's unpack one of the most impactful forces,
Yeah.
regulation, and how traditional finance is reacting. First off, Hong Kong seemed to be hosing down some stablecoin frenzy.
Yeah, that signals regulators there are definitely taking a tighter grip. And what's really insightful is seeing how Wall Street's responding, especially around stablecoins.
How so?
We're seeing tokenized money market funds emerging as their kind of sophisticated answer. You've got firms like Goldman Sachs, BNY Mellon. They're pushing tokenization to keep traditional money market funds competitive,
Ah,
especially as the U.S. moves towards its own stablecoin rules. That's according to a J.P. Morgan strategist anyway. It shows TradFi adapting, using the tech, not just resisting it while trying to stay compliant.
that's a key point, the adaptation. Meanwhile, though, there's still significant legal and government scrutiny elsewhere. Dragonfly, the VC firm, had to respond to DOJ scrutiny over their Tornado Cash investment.
Right, the privacy mixer, always controversial.
Exactly. And Roman Storm's team, one of the developers, his case is expected to close next week. This ongoing legal pressure on privacy tools, it's a huge factor for developers.
Definitely.
And on a more worrying note, this real-time crypto laundering, exposing vulnerabilities in centralized exchanges. Apparently, stolen crypto is being laundered in minutes, often before hacks are even public. That's a massive security challenge.
It really is. And these regulatory shifts, these security issues, they have broader, sometimes sobering implications. Look at El Salvador, for example. Their big move to make Bitcoin legal tender. Groundbreaking, sure. But reports suggest it hasn't really helped the average citizen much. And recent changes to their Bitcoin laws under an IMF agreement arguably put BTC benefits even further out of reach for ordinary people there. It just highlights that plugging crypto into a national economy, it's way more complex than just adopting it. It needs infrastructure, education, the right policies to actually benefit people.
We also saw Robert Kiyosaki, Rich Dad, Poor Dad,
Why, yes.
warning about risks with BTC, gold, and silver ETFs, worried about fraudulent paper claims on real assets. That always sparks debate.
He did raise that concern, yeah, about leverage or maybe not having full backing in some ETFs. But it's important to get the counterpoint. ETF analyst talking to Cointelegraph. They largely said his fear, while kind of understandable, is unfounded for the big regulated spot Bitcoin ETFs.
Because they hold actual Bitcoin.
Exactly. They're structured differently. It's just typical of a new market, right? Different views clashing. And on a more positive integration note, Hive Digital Technologies, the first publicly traded Bitcoin miner, they just marked a major milestone at NASDAQ, expanding their high-performance computing.
So deeper integration into regulated markets continues.
Right.
And just quickly, a slightly lighter bit, Ripple's CTO apparently regrets censoring Ozzy Osbourne on their platform once.
Yeah, I saw that.
Said it felt like it wasn't the authentic interaction with celebrities they wanted. Just a little peek behind the PR curtain.
It just goes to show, right? We talk market caps and tech,
Yeah.
but the human element, brand perception, still critical, even for these cutting-edge finance projects.
Okay, shifting gears now to the real cutting edge.
Mm.
How the technology itself is shaping crypto's future. We're hearing smart contract devs think AI code will actually make crypto safer, despite those earlier vibe coding fears.
Yes, exactly. Despite the initial skepticism, maybe some jokes about vibe coding lacking rigor, the feeling among developers and auditors is increasingly positive now.
Really? How?
While AI-assisted coding is proving genuinely useful for improving security. It helps find vulnerabilities, optimizes code, makes development and auditing smoother. It's a pretty significant step towards making dApps more robust, more secure.
That's definitely reassuring, given all the hacks we've seen. But looking at another fundamental challenge, some are arguing that tokenomics are broken and only contribution can fix this. That's a pretty bold statement. What does that really mean?
It is bold, but it's a critical point, I think. When people say broken tokenomics, the idea isn't that every project is bad, but that many early models. They just didn't incentivize real long-term contribution or true decentralization.
So it's not just about price bumps.
No, exactly. It's about the long-term health and usefulness of a project. A good token model creates this sort of virtuous cycle where users get rewarded not just for holding, but for actually building or governing or securing the network, moving beyond just speculation to like genuine ecosystem growth, real value creation.
That seems to connect directly to something else. We're seeing this talk of a centralization crisis threatening data privacy. How do those two link up?
Oh, they're deeply linked. Our growing dependence on centralized cloud infrastructure.
Right.
And then you add things like the IRS's proposed Mega API, basically a huge data pipeline giving the IRS potentially unprecedented real-time access to financial data across platforms. These things expose real vulnerabilities for data privacy, for accountability.
And that's where broken tokenomics come in.
Yeah, because if projects aren't properly incentivizing decentralized solutions, what happens? They often default to centralized ones because it's easier or cheaper initially. The good news is decentralized tech, if it's designed and incentivized right, it's uniquely suited to tackle these exact problems.
Right.
Distributing control, distributing data more securely. It offers a real alternative to that centralization trend.
Okay. And just a quick note for the very long-term future. We saw that news that Bitcoin's quantum countdown has already begun.
Distant concern, but
One to keep filed away.
indeed. I mean, quantum computing that can break today's crypto standards, it's still mostly theory, years, maybe decades off. But the fact that experts are even talking about a quantum countdown for Bitcoin, it just highlights the constant need for innovation, for adaptation.
Yeah.
It reminds us that even the most secure systems will face new challenges eventually. And the crypto community is already thinking about post-quantum solutions.
So bringing all these layers together, why should you, our listener, really care about these underlying tech shifts like AI in contracts or broken tokenomics or even that distant quantum stuff?
Well, you should care because these aren't just, abstract ideas for developers, not at all. They directly impact the fundamental security of your assets.
Right.
They affect the long-term sustainability, the viability of projects you might invest in, and they touch on the very privacy of your data in this increasingly digital world. Understanding these shifts, it helps you make smarter decisions, look at projects more critically, and ultimately just navigate this whole evolving landscape with a bit more confidence.
What an incredible deep dive today.
Yeah.
Seriously, we've covered so much ground. Immense volatility, the Satoshi whale's $9 billion splash, the nuances in Bitcoin derivatives, then Ethereum's big ambitions fueled by institutions, XRP's dramatic correction, plus are unpacking all the regulatory action, TradFi's adaptation, those pressing security issues. So, I mean, what does it all mean when we pull it together?
It means the crypto market is just this incredibly complex, multi-layered system. It really demands a nuanced view. It's this dynamic dance between massive capital flows, regulations trying to catch up or shape it, and nonstop, sometimes groundbreaking tech advances. All these forces need careful watching, and they're constantly reshaping not just what digital assets are, but their bigger role in the global economy, in our digital lives.
Absolutely. And as you, our listener, consider all these dynamics as constant push and pull, right, between the decentralization dream and the growing influence of traditional finance and regulation. Maybe think about this. What do you think the ultimate form of money will look like in the future? And critically, what role will privacy actually play in it? It's a question that keeps evolving with every deep dive we take. Thank you so much for joining us for this deep dive into the latest in crypto.